You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, Dale, good to hear it. See everybody in the comments. Thank you guys for joining. My name is Jonathan Rose, and every morning I get on Masters in Trading Live, 11 a.m. Eastern Time, go over the market, share some thoughts. Once in a while, we'll share our trade of the day. We talk a lot about volatility at Masters in Trading, but we don't just talk about the VIX. The VIX is a 30-day measure of vol. Better yet, you want to look at VIX term structure. VIX term structure, just peeking my head, making sure audio is okay. Sorry, there's a little buzz you're saying. Keep it going. The recording should be just fine, but let's keep going. Telvin, we're okay? Just checking with Telvin, my sound producer. We are live. Yeah, we can deal with buzzing, right? Buzzing, it's a little poppy. That's okay. Nevertheless, I'm going to get right to the screen today. We got a lot of stuff going on. It's crackling a bit. Just give me a little minute. I've got my producer playing with my computer right now. Overall, and as I'm just looking at the market while I'm talking to you guys, watch that VIX 90. VIX 90 right now, last trade, $25.48. And you can get this symbol. It's just VIX 9D. Okay? It's just like 1/4 of the VIX. The VIX is 36 days. VIX 90 is just 9 days. And it's a really, really good way to just get a feeling on whether risk is coming into the market or whether risk is coming out of the market. When risk comes into the market, the indices go down. When risk comes out of the market, I'm going to move over to our, Telvin, can I borrow the we are getting it done. All right. Thank you, guys. I appreciate everyone chilling out with me for little technical difficulties, but we're going to be okay. Everything's catching up. Okay. 4 things to cover today. 1, a cause to celebrate. 200 period moving averages. You guys are seeing 200 period moving averages probably all over your email inbox because everybody's talking about this, but are they talking about it the right way? Talk about volatility. Friday, we have non-farm payroll, unemployment. If you get stuck in a position today or tomorrow, don't worry. The market's going to move on Friday. We have a catalyst expected to come out, and that is usually, most often, the most volatile day of the entire month. So expect that on Friday. Man, I'm excited to share this. John B., a cause to celebrate. Since the end of June last year, I have made 23 different earnings trades, okay? 23 earnings trades. I'll even write it. 17 closed with winners. 17 have closed with 10. 17 closed with 10 winners. Minimal investment, 1 contract. Average investment, $380. An average of 24 days in those trades with an average return of $103, guys. That's about 35% on every single earnings trade with an annualized return of 412%. Again, this is how John did. What I love about this is that John is learning with one lots. Prove to yourself that you can make a strategy work, and you do that slow and steady with one lots. Once you prove a strategy works, there's plenty of time to press and add to your bet in the coming years because earnings comes around 4 times every single year. So John, thank you for sharing. Our earnings advantage continues to be our best performing program. TLT. We've been talking about TLT. Now, TLT, in my opinion, is what caused the market to fall. Why? Well, I think that President Trump is trying to bully the Fed into lowering rates. And I think that's why TLT is rallying. TLT got right up to its 200 period moving average. That was at 92.70 and then sold off. Interestingly enough, you don't want to make a trade just based on a 200 period moving average. You want to dig deeper. We like to say the creative trader wins. This is out of order. QQQ, at the same exact time that TLT was getting to its 200 period moving average, QQQ was getting to its own 200 period moving average. I think QQQs are a little under that 200 period moving average right now, but bonds have sold off as well. Let me go to this previous chart. And this previous chart might confuse some of you. I get that, because what we're looking at is bond volatility. You see this little bump right here? That's what we got to watch out for. This is why the market is breaking. It's bond vol coming into the market. So bond volatility got low. That's what this is. And now it's going out. If bond volatility continues to go out, that's what I'm concerned with for this market. Okay? Watch your rates. If TLT takes out 92.70, I'm very concerned about the downside of the market. I don't think TLT is going to rally up and take out that 92.70. QQQ, 200 period moving average. And then finally, just to give you an idea, February 25th is when the TLT gapped higher. That was right here. TLT gapped higher, 92.75 is the 200 period moving average. But after February 25th, when the TLT gapped higher, QQQs have been offered ever since. Watch your TLT, watch the bonds. That's by far the most important component of this trade. We got a special day today. Today, for all of our members at 2 p.m., we are doing a live earnings class. We're getting to the end of earnings season. Earnings continues to be our very best trade. And every earnings season, we open the Earnings Academy 4 times a year. We make a whole bunch of trades, get out of them, close earnings season down to the next time. It's just literally rinse and repeat. We like to call earnings Groundhog Day. Same thing over and over. Thanks so much for watching. Everybody that's part of our All Access, you guys hang out. For everybody else, thank you so much for joining. We'll see you tomorrow. Thank you, guys.